The Friday's close, as always, we are having again Jerry Gidel, and he is going to comment about the September stocks for corn, soybeans, and wheat right here on Connected Farmer, your channel to keep you up to date with the latest trends in agriculture and livestock. If you are new here, please make sure you subscribe. So, Jerry, how are you today? So, it seems that corn has rebounded this Friday, and soybeans are still in the negative territory. How do you explain that?
Well, yesterday's updates on the USDA's final ending stocks, the September quarterly stocks turns out to be the ending stocks for corn and soybeans. June's is wheat's US ending stocks. In that, and the numbers yesterday with the soybeans finding about 80 million more supply. Basically, they had 80 million more, a higher number than they estimated the first of earlier this month or early back in September. And so they had to come up with some way of figuring out where the beans come from. So this particular September number always has been a little erratic at times, ups, down, sideways. Actually, during the year, if you thought about it, our residuals were very, very surprisingly low. And with this adjusted number, they have come back to more realistic numbers through the years. But we've come up with really a pretty small residual at the end of the year, too. On the corn side, the other side of the question there, uh, the USDA actually reduced the corn size slightly here versus they increasing it on the soybeans here on this after the September report, but primarily because of reduced planting area and just I think it was a 0.6 of a bushel decline on corn yields. But the twist of it is that the he'd used these numbers that the USDA was using. Turns up that they, I guess, were too optimistic, and so the stocks numbers here, were higher than expected. Not by a big amount, it's about 70, 80 million type situation, but it really reflects back to some of the recent information from the U.S. livestock industry, where the hog numbers here on the 1st of September were, geez, the pig crop was down at 94. The marketing hogs were in that 95, 96 area on the supplies, and that was lower than expected. And so that, you don't have the livestock there, you don't feed as much. And so that was not a surprising number. The twist of it is the 1.2 billion carryover stock is extremely tight yet, though. And I think it's back to 2013, 14. So we've had this, right after the really sharp decline in stocks in 2012, have we been this low? So one thing is one factor, and I think that's part of what happened today. The other big factor is wheat. Wow, what a change it's had.
Yes, and how do you see the market expectation versus the stock, the real stock for wheat?
Well, the stock market, the September stocks reports for soybean or for wheat, I should say, really kind of came in with a shocker there. It was well, the trade is looking for a 1.85. It came in 1.78, so in essence 70 million under expectations, and that number is for a September 1st stocks report. Wow, that's as low as we've had since 2007. Wow, that's even further back than the core number from there. So, I think that was a feature in the thing that came through. to some extent, this is all caused by the fact that the USDA, on their small grains report, this also issued the same day, they came up with a smaller U.S. Wheat crop. Now, boy, I don't think anybody would be surprised by that situation. Uh, but the magnitude of the change here of over 50 million, a downward adjustment was definitely, I don't know, probably at least 30 million further decline than people look for. And the twist of it is that the decrease came in the winter wheat numbers. It didn't come, well, we had a 12 million decline in spring wheat, but we had a, geez, 35, 40 million decline in the winter wheat numbers. And part of that's from the northern stretches of winter wheat up there in Montana and South Dakota and areas like that. And then even the Pacific Northwest, which has been completely decimated by this extreme heat in the western U.S. and across the northern plains, they took 9 million more out of that. So that was the real difference. And then that with smaller supplies, and that you're really looking at in the wheat demand world, you're looking at exports, which were down from last year, but still pretty solid in the first quarter. That's usually like all of the U.S. exports. You usually have pretty strong first quarter export sales in that, and then you put that together with the our food demand is pretty constant. It kind of becomes pretty minor ups and downs during the year. The amount of bakery goods we have and the amount of flour we use and things like that kind of stays the same. Exports are a part of it. We had a really strong export period in here too, as a factor. And so we came in with a number, as I said, was the lowest for September 1 stocks. And that's definitely provided the strength of yesterday. And then more and more commentary and concerns about the Russians continuing to ratchet up their taxes. And in essence, they're getting very conservative about exporting their wheat. And that's a different strategy that we've seen from the Russians in many years. Usually, even if they have a smaller crop, they let things kind of hang out pretty good in the first half of the year, and then they clamp down. Well, in this case, they started this new Vaseline or changing export tax thing back last spring, and they're continuing to use it. And at this point, they're, I think I saw someplace that they were up about $10 in their taxes for shipping over the last, I think it was something like 3 weeks. So in essence, I think people are getting concerned that they're not going to have the supplies. And now the U.S., not to say that we're going to be a big exporter into the world because we don't have a lot of supply, but the other feature in the thing is that between now and winter, there's always a very, very strong tendency in wheat to be rallying the market, and because everybody wants to get their supplies around them before the winter snows fly here in the northern hemisphere.
And do you think there will be another big factor in the short term for the market, or we are just going to see something related to the stocks for the coming weeks?
Well, and of course, this time of year, everybody's got their ear to the ground. They're looking out to see what kind of reports we get from the country in the U.S. That's always a highly important factor here. But I think definitely the other key question in here is that our good Asian buyer out here has been a bit quiet in the last, let's just say 3 to 5 weeks here, and that they were buying some beans along there for, up until a couple of weeks ago, and they've been pretty quiet in that area, and that I kind of feel like that's highly important, because the real twist of this is, I'm not sure everybody's heard this, but there's definitely been a lot of energy issues around the world. China's been impacted significantly. I guess they've lost or didn't get stockpiled as much coal as they needed, so they're ratcheting back their electricity demand by, actually, of all things, offering, excuse me, telling some of the soybean processing plants that they should shut down for a week or 10 days. And that's disconcerting about soybean demand as we look forward. The other feature is that Europe's had issues, particularly with issues in the UK, where they had shortages of things and personnel, and right over there. Excuse me, getting a little frog in my throat here. It turns out that the energy world is definitely impacted things here from the standpoint of just transportation, but it's also impacted right now, fertilizer is always it's highly connected to the energy world, and particularly in natural gas. It makes anhydrous ammonia in the U.S. and things of that nature, and so that's higher prices there. And there's lots of consternation as to how many acres we're going to plant in the U.S. because of higher costs of corn. There's definitely ideas here in the corn market that we need higher corn and bean acreages. But right now, I think there's people looking at the wheat market, and so that means we're starting to potentially ration some of these yields, or excuse me, these acres out here in the U.S. But it's going to be choppy in here as we go through this next 2 or 3 weeks, as we kind of get a general feel of how the yields are going to come out. And of course, on October 12th here, we're going to get another USDA update. It's going to be interesting as to how the yield ideas kind of form there. Some of the eastern areas have been a little disappointed in their corn yields than what they thought originally. In the western part of the U.S., where they tend to west of the Mississippi, as I say, they have been a little bit positively responding to their soybean yields versus what they expected. The West usually tends to harvest beans early, while the East harvests some of their corn. So that'll be the big feature. I kind of feel like we're gonna maybe go sideways for generally here for 2 or 3 weeks, but this market is quite anxious to get a hold of some supplies here. And so the producers out there, if they can hold off their sales here during this period, I think this market still has a little bit of a post-harvest rally here in November.
All right. Any other words, sir?
I think we kind of tidied it up here. It's been an interesting report yesterday. Come see, come saw on some of this stuff. As usual, the USDA gives us a head turner every once in a while. Beans was the one yesterday, and even wheat, if you got to think about it. I don't think a lot of people anticipated that big of a change in it, and so we always have something to discuss from the USDA reports, and we only have, and I guess right now, less than 12 days away, we're going to have another one.
Yes, exactly. Thank you, Jerry.
You bet. Have a good day, Lewis.